Mic on. Mic feedback off. Mic feedback on.
All right. Can you guys hear me? This damn thing is just impossible. What the fuck? Very strange. Very strange. 1, 2, 3. Elemento P. Not sure what the fuck happened. All right. You guys can hear me? Yeah. All right. Okay. All right. All right. I'm not sure if you can hear me, but if you do, we're going to. You can play back afterwards. Okay, good. Thanks, Alessandro. We can do it once it. You can go back and replay it again. All right. So we gave the benefit of the doubt in the Nasdaq from this structure to this structure. Okay. And this now looks like it's going to fail. All right. You have a double top in there. All right. So you got the double top. It's about to fail. This breaks. Then we start looking for that next point, which is down here at 11.8. All right. So this is a good point to start the short. All right. And then if it fails, it goes back up. Then you can get out. Don't think twice about not stopping out. Okay. If it does one of these jobs, you stop out. All right. And that's how you pick your battles with these kind of crazy moves to the upside. Right? It's a 10% move in what, 2.5 days? That's not normal, right? Easy come, easy go. Remember, the point of this is to provoke emotions, right? That's it. It's just trying to force people one way or another. And the bears are going to say, "Oh, this is the top." The bulls are like, "Oh, this is going up forever." And both sides love it because it's definitive. It's something that's going to pay you now, quickly, fast. And degenerate gamblers love that kind of action, right? Something that's going to be immediate. something that's going to um, uh, justify that they're smart, both sides. Okay, that this is up too much, and I can see it. Or hey, this is going higher, right? All right. Let's look at S&P. Right, S&P hasn't broken. It doesn't look like it's going to break the structure yet. Small caps are still kind of pushing higher. Transportations are still pushing higher. Dow Jones pausing out a little bit. All right. So let's give it some time. Let's see what else he wants to do. All right, let me go back to see how many. Uh, get some data, and I'll be right back with you. We'll do a little bit of macro. All right. So think of an economy like this, right? That we're looking at the amount of people that are working. When things are good, everything is fine, right? Everybody's working. Then you get into a situation where you go into a recession, and now you have less people working. Okay? All of these are unemployed. All these people up here are unemployed. What the data measures is this, right? Whoever is left working. These people, they're not counted. Not that they don't consume, not that they don't do, economic activities, but in terms of the workforce, the profits, the so forth, they're just measuring a smaller piece of the pie from where it was. This is going to show you, like a RSI, it's going to show you some kind of an improvement when it shrinks from one to the other. Okay, so the example that I use is the Philippines. If you look at the Philippines, there's 110 million people in the Philippines, but their entire economy is mostly Manila. Okay, so you have the Philippines, and then all you're measuring is whoever is in Manila. And from all those people in Manila, you're only measuring, I don't know, uh, a fraction of them. Okay. But what about the other people? Well, they're mostly unemployed, you know, low income, low consumption. Okay. So this is what a lot of the perma bulls will point to. They'll say, "Well, look, there's still people working." Well, fuck yeah. It's not the apocalypse, man. Of course, there's going to be people still working. I mean, what does that mean? Well, they're buying homes. Yeah. Not everybody's unemployed. If everybody was unemployed, we're back to the fucking Stone Age, right? So the point is that you're looking for the ability for the economy not to go exactly back to January 2020. That's going to take years, okay? But to see, okay, we bounced, we came out of the lockdown, great, and we've expanded the economy a little bit, okay? Are we heading in this direction? And how fast are we heading to that direction? Because when you're telling people that yeah, it's a V-shaped recovery, that leads them to believe that oh wait, in 6 months we'll be right back where we were, everything is great, and oh we continue. No, that's not reality. So what do we have? Well, we have the portion that was overdone, okay, and then the bounce, and now we're having stagnation. Stagnation is a killer because if you're not progressing, the longer that it stagnates, the more likely it is we're going to go right back down. And that's what people say double dip recession. Even though it's one great big recession, which is really a depression, the longer it lasts, okay? And that's problematic. So they're always going to focus on this. They'll skip this, right? When it was going straight up, they'll skip this part and then start talking about this and say, look how great America is and how bullish it is, and it's a V shape, and we're gonna go right back, and I have my 6 point model and da 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 and bullshit. Okay, so don't let them fool you with that. Don't let them fool you with that shit. You know. Then they tell you about, well, look at the credit markets. Forget about the credit markets. Credit markets are going to be funded by the Fed immediately, and that's exactly what happened, right? But that's not what good are credit markets when you have 750,000 people every week losing their job. Yeah, but we created 10 million more jobs. Yes, from zero. It's not the same thing. It's not the same thing. You see, it's kind of like trying to talk to somebody that's insane. That no matter what you say, you're trying to get a point across, and they'll just say something completely different. They'll twist everything you say. They'll talk about random, red herrings. They'll start talking about other things, and you're sitting there. You're like, dude, I'm trying to explain to you something, and you're talking something else. You're in La La Land, and that's what they do. It's exactly what Trump does, right? You'll ask him something about the economy, and then he starts talking about Korea and how good he did with that. Sorry, with that leader in China or something. And you're sitting there scratching your head like you can't have a conversation with this person. You can't exchange ideas and communicate. And it's the same thing with perma bulls, perma bears, and bullshit artists. All right. So it's 11:24, and market is paused. It's up at that range of limits, and it's waiting. Sorry, I'm looking at something else. And it's waiting. Okay, so it's either going to correct through time or price, or a little of both. Just want to take a look through all the stocks that I have. Everything is green, obviously. Hilton. All right. This is Visa. It broke down back into structure. The Head and Shoulders didn't really fulfill. It just came to this point of support and then bounced, right? Let me take a look at some of these emerging market currencies real quick. So the dollar is falling against the Indonesian rupee. Nigeria, forget about. Forget about Venezuela. Right. Cambodia. Uruguay. Brazilian real. Now we're expecting the Brazilian real to appreciate against the dollar. I want to see if the dollar does start to tank, then it should start showing up in these smaller currencies, right? So you look at the Chilean peso. It's been falling from the Chilean peso. Look at that, 14%. So the dollar's falling against the peso. Peru is still up there. It's more of a pegged currency, so we don't look at that. Okay. You see this structure here? And this is what I fear, because I've seen this a million times. Forget about that, it's the US dollar Japanese. So you have a 1, 2, 3 down, it breaks out, pops out, and then tanks. Right? And that's what I'm afraid of in the DAX. That's why I don't want to take it long. Right? It's too high to take it long. It's not what you want. Because the higher it goes, the more expensive it becomes, the more likely it is to tank and retrace that 10, 11, 12, 13, 14%, whatever it goes to top out. Let's get rid of these things here. All right, so small caps have a rising wedge, a flaggish looking thing, and it's starting to weaken. NASDAQ in a wedge. See, look at this gap, 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 gap. One gap, two gaps, three gaps. Just on the gaps alone, it's up what, 3%? On no president. I have news. What? There's no president. Oh, good. All right. So 11:30. Everything's just paused, pegged. We'll stop it here for a while, and I'll come back later this afternoon because nothing is really moving. So Bitcoin is up 7.7%. That's huge. But again, it does this, right? It does it on the way down. It does it on the way up, breaking out even more. It's up to 15,265. Right? And let's measure it from the all-time highs and see where the point of control is. There we are. Point of control is at 9,200. And it needs another 30% to go to that all-time high. All right. I think it can do it. Honestly, I do. I don't think it's going to do it today, of course, but I think there'll be some kind of a correction. But it's an open waters. I mean, there's nothing to stop it. No resistance. Good coffee. All right, so from the bottom, let's measure the bottom. from the bottom. The point of control again is 9,152. So right here is the point of control. Look on how little volume down here. Price moved up. There was barely any buyers down here. Or sellers, right? And boom. The higher it went, the more volume there was. And then there was this void right in here. And then built the pressure, and boom. Well, all right, let it go. Rip, baby, rip. This thing is so crazy, it can do 10% per day. 3 days, we could be at all-time highs, 20,000. Imagine. I'm not saying that's what's going to happen, but think about it. It's crazy. All right, so I'll be back later. Anybody have any questions? Are we in a case? I don't know what this K thing is, honestly. How are you, James? I don't know what this. Everybody talks about. See, okay, the K and the V. These are perma bulls that come up with shit when it doesn't go their way. Clearly, we're not in a V-shaped recovery, and that's something I've been saying, I think, since day one, uh, from when the bounce started. We're we are in a double dip recession and a prolonged recession. And that's always been the theme because that's what the macroeconomics says. Okay, not because I say it, because the cause and effect is very clear. That you got 30 million, 25 million, whatever it is, people sucking off the government tit. Uh, those people you can give helicopter money, and you can't stop. You cannot stop. You have to keep giving it to them. And it's kind of like QE when it first came out, right? The first QE, it was like, okay, we're just going to QE a little bit and everything will go back to normal. 10 years later, we're QEing our asses off like there's no tomorrow, and we can't live without QE. I think this is going to be one of those paradigm shifts where you just can't ever stop stimulating. This is, it's the natural progression when you get to zero interest rates. When you lose that ability to go to zero interest rates, then you end up in a situation when you have to QE to infinity. If you QE to infinity, then every central banker is going to tell you the same thing. We need more stimulus. We need more government intervention. We need more stimulus. We need more government intervention. What does that mean? Well, if you print more money, you're going to print more bonds, then the central bank will have more bonds to buy. Right? But remember, you can't multiply wealth by dividing it. Wealth is wealth. It's constant. Okay, so this is wealth, whatever it is. Okay, the amount of dollars that you choose to print around it is not going to create more wealth. The wealth is constant. So you can keep printing more and more dollars. You're not going to change the wealth. So that's why you see that the uh, debt to GDP, not this one, debt to GDP continues to decline. Right? It keeps falling and falling and falling. It has been doing so for quite a long time. It's not going to stop. It's not going to change. You're not creating more wealth. Yes, it sounds good to print for the people, and that's great. And I'm all for it. I'm not against it. But you're not just printing for the people. You're printing to bail out airlines, right? And insolvent companies, mostly that were buying stocks during the good times, and they couldn't grow their earnings in the normal traditional way, so they had to manipulate it. They had to reduce the amount of stocks that were available. So any profits that were making, they were dumping them and buying back their stock. So what happens then? Well, again, the value, the wealth, is the same, right? So you have this many stocks available, all right? So if you shrink the amount of stocks you have, it makes this appear more valuable. But it's not. It's the same. It's constant. So let me show you this, what I mean. Corporate profits have gone nowhere, okay? And Q1 2012, they were 1.8 trillion, 1.9, all right? Fast forward to Q4 2019, what is corporate profits? Same, 2 trillion. Where are they today? 1.5 trillion. So this has not changed, but the earnings per share have risen. Why? Because there's less shares, right? Does that make sense? Yeah. So you end up in this really weird, funky kind of scenario where money printing becomes the opposite. It's the opposite. That you're printing more and more dollars, but you're not building more wealth. So that's why the saying goes, you can't multiply wealth by dividing it into more and more dollars. Dollars in of themselves are not value. Okay, they're just pieces of paper. So let's say we're measuring this, okay, and let's give it a number. Okay, let's give it 100. The number from here to here is 100. Arbitrarily, we just decided. Now we're going to say, well, it's 1,000. Has this changed? Nope, just the number changed. You didn't create more distance. You just decided to increase the digits in between here, the measuring tool, right? All you did is just increase the digits. That's all you did. You haven't created more economic wealth. All right. So that's the problem. That you can increase the amount that the numbers on the ruler, but the ruler itself will not change. And that's the same thing with corporate profits. It's the same thing with the economy and the wealth. Okay. There's a lot of fuckery going on. People don't understand these small little things, and that's why they keep saying, well, we need to print for the people. Yeah, okay, but you're not going to increase the wealth. You have to go out to actually work, produce, and that's why the job guarantee doesn't work, right? It doesn't work because you can peel off a gum, plant flowers, take care of grandma. That's not productive. I'm not saying you shouldn't do it. I'm just saying it's not productive. Uh, Milton Friedman said, oh, you guys are building a canal? And the guy's like, no, we're just creating jobs. They're like, oh, you're just creating jobs. Okay. So why don't you take away their shovels and give them spoons? That's a job, right? So sit there and dig up the ground with spoons. Doesn't make sense. All right. So we're going into this phase in the economy where you end up printing more and more dollars, more helicopter dollars, 30 million uh, sitting there receiving these checks to create demand side economics, and it's just as bad as supply side. Because no matter how much dollars you give for demand, it'll never stop. You can't lower interest rates to increase credit. And that's another thing that you know who loves to say this? This is Logan. He loves to say this. He says, "Oh, I'm not worried about the government debt. Oh no, not at all. It's nothing. It's okay because the government debt is 27 trillion. I don't know, if you're saying that today, but it's 27 trillion, and the national wealth is 140. Ha 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 ha! This is so stupid. No, that's wrong. Why? Because private money creation is 350% of GDP. Okay, it's not 27 trillion to 140. Okay, the private money creation is 350. So let's say this is 30 times 3 is 90. Okay, and then whatever it is. So your debt to your wealth is up here somewhere. This is all debt. Yeah, granted it's not public, doesn't matter, but it is debt. And if all this is debt, what's the opposite of debt? Because you can't have debt without the savings. Well, the opposite of that is savings to somebody. To who? The top 5%. Okay. So when he's sitting there telling you that garbage, like, oh, I'm not worried about the public debt. No, you should worry about the public debt. Because if the private debt money creation is insufficient, that you require to also have the government printing, then you're screwed. That means the private credit is in trouble. It's insufficient. It can't grow at the same rate it used to. So now you need deficits. So it's not the deficits in of themselves, it's what it represents. It's what those deficits represent. And it represents a sick credit market. It represents wealth inequality. Too much dollars held in the hands of the few. So now you're going to go from excessive credit creation, which is excessive savings to the few, right? To now you're going to get the public debt rising constantly. And you're not going to create more economic wealth that way. And that's why I say in a perfect economy, what you want is a feedback loop between household income to saving, profit savings that's going to funnel right back to the productive economy. And then this is an ecosystem feedback loop, right? You don't need more dollars. You just need those dollars to circulate between private sector 1 and private sector 2, right? That's a healthy economy. And then what ends up happening is the wealth of the economy grows over time, right? It grows over time. It gets bigger. The pie gets bigger for everybody. And then, because the pie is so much bigger, then you do require deficits, and that's okay. So let me give you a perfect example of what I'm talking about, and I'll shut up after this. All right, let's take a look at Manila. Let me show you Manila. All right, here's Manila. Their government budget is 3.5 to GDP. All right, fair enough. Their annual GDP growth, forget about now COVID, you can see was growing between 7 and 6%. Look at that. Okay. So what does that tell you? That the economy is getting bigger and bigger by 6%, while the deficits are also increasing, but they're only increasing by 3.5% versus the GDP growth of, let's say 7, just to make it a round number. So you're getting $2, 2 pesos of GDP growth for every $1 or 1 peso that the deficit spend. That's magnificent. That's fantastic. That is what you want to see. That's healthy because it's telling you that the economy is growing in a sustainable ecosystem feedback loop way. All right, $1 of public debt equals $2 of GDP growth. The economic pie is getting bigger. US is the opposite. The more we print, the smaller the economic pie becomes. And that's the problem. So, is it a K-shaped recovery, a V-shaped recovery? No, it's a stagnant recovery. It's a slow recovery. We're not getting more wealth. We're not creating more wealth. We're creating uh, more dollars the without the economic growth to reflect it. And that's why, again, look at the savings. Savings popped up not because of deficit. Savings picked up because of fear, right? So then, as those stimulative dollars were handed out, right? What happened? Savings started to go down. Okay, why did it go down? Because we opened up again. The fear was less. Okay, so when MMT tells you that, oh well, when their debt is our red, their red ink is our black ink, that's not true because your savings don't go up. Your savings are going down with more and more stimulative checks, and you're spending it, and it doesn't last. We spent $4 trillion and got what? Nothing for it. Okay, we got to bounce from zero. Okay, now that there's no stimulus, what's happening? Economy stagnating. So you have to perpetually keep printing money and keep giving it out to people that are unproductive. So how are you going to grow GDP? I don't know. Anyway, I hope that made sense. All right. I'll be back later on this afternoon, unless something funky happens. All right. Take care, guys. I'll talk to you soon. Bye bye.